Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Today we will take a look at Australian dollar instead of the gold market, mostly because on the gold market there are no big changes since our last discussion, so even our 3-drive pattern that we have talked about still stands the same. So I could show you, as you can see, indeed market has shown on Friday some dropping right to the bottom that we have drawn in the beginning of the session. So it just was schematic indication where bottom could stand based on the extension, that just to get the combination of the 127, 127, 1618 extension is one place from the second drive and from the first. But as you can see, market mostly has confirmed our suggestion, and indeed low stands almost at the point that we have specified in the beginning of the session when the market was in this area. So that's why today actually I thought that maybe it's not really big sense to take a look again in gold, because we already have discussed the long-term perspective from the gold market, where talked about the intraday patterns on the daily chart, what we're waiting for. That's why today I thought maybe it makes sense to take a look at the Australian dollar. But in some degree, Australian dollar is also the gold-related currency, and it has some common features with the gold market, because you know that Australia has the gold in export volume, and in general it's not really very small. So on Australian dollar, we have talked last time before the Christmas, on 25th of December it was, but say right in the Christmas. So and we've come to conclusion that Australian dollar shows really positive mood right now. The fundamentals of the Australian economy also stands very well. That's because the whole world turned to the growth cycle, not just developed countries, but emerging markets as well. And that really shows the big demand on the commodities, on the basic commodities, basic metals, ore, iron ore, copper, so lots of the crude oil, some gold market problem, gold probably as well. So and that definitely brings support to the Australian economy, especially as the demand from the Chinese also is growing. That's really supportive for the Australian dollar. That's why since the end of the year of the 2017 in December, you can see Australian dollar has started to show this really impressive rally. At the same time, this is actually first rally after the long period of the dropping, and market already has formed multiple upside reversal swings, because initial market has exceeded this swing, but no big retracement has followed. Now it also has exceeded swing from this top to this bottom, also no big retracement. And you can see market is showing some kind of the V-shaped retracement. And in such circumstances, the odds of the retracement are growing. So sooner or later, but probably sooner, market should show some moderate retracement on the daily chart. And currently, we see the situation that this moment where retracement could start really stands very close. Because if you'll take a look at the CFTC report, on CFTC data on the Commitments of Traders report, on Australian dollar, you'll see that the net position on the futures on Australian dollar has turned bearish. And in the last 3 weeks, a significant amount on the bearish position, new bearish position, have been opened. At the same time, Australian dollar is coming to major resistance at 79. You do not see it on the daily chart, but on the weekly chart, if you will take a look at the weekly, you will see that this is major 618 resistance on the weekly chart, and it's also monthly pivot resistance one. That's why combining of these two moments, the Commitment of Traders report that indicates increasing of the bearish positions and the technical picture that market is coming to really strong resistance, makes us think that it's very high chances that retracement will start right from the 79 area. It's very close, and probably it will happen on the coming week. What's also interesting that this situation totally agrees with our view on the euro currency on the dollar index, because there we also expect some minor continuation of the previous action, but both markets also are coming to strong fib levels. So on the daily chart, 79 will be also, let's take a look, weekly pivot resistance one, and its natural support and resistance area stands. So as you can see, this level is also be natural resistance. That's why we think that probably will be major destination of the market. On the daily chart, we do not have a lot of issues that we could analyze. So actually, the one thing that could be useful maybe at these lows. So if we'll take a look, we have some kind of the hand shoulders shape. It's not quite the hand shoulders because downward extension is too significant for the hand shoulders. It should be 1618, but it's definitely here is significantly lower. But in general, you could recognize the overall shape of the reverse hand shoulders, and by keeping the harmony of this, market could show retracement right to the 7730 area. What's interesting is that take a look at the 3-8 support coincides with this natural support area. It just will be 30% retracement of this rally. Finally, on the daily chart, we have another issue to keep an eye on, and this is jet Napoli thrust that we have right from December lows to the top. So this is very good thrust, and it's definitely will be suitable for some patterns. Personally, I prefer to get bread and butter buy. For example, if market will show a retracement rate of 30%, it could become the very good bread and butter buy opportunity, because overall context and overall sentiment on the Australian dollar is bullish, and a retracement will be very helpful. So it could be useful as for just isolated trading, just to take the profit of the bread and butter, or it will be useful for keeping the half of the position for possible further perspective of the upward action. So that's another pattern that we will be watching for here on the daily chart. On the intraday charts, guys, we don't have a lot of helpful tools. So actually, I have found only one more or less reliable ABCD pattern, because actually this is minor regardless equal to buy. In this case, we could use this low as the reliable ABCD. So here market has hit the OP objective point. Next one stands at XOP. It's also, take a look, 79. So probably when the market will hit it, after that, some maybe patience will be formed or something of that sort. Because currently, as you can see, we see nothing. Just supportive action, maybe divergence you will see here. But not much tools to discuss. So training line support for the market in this ABCD pattern. So maybe when the market will hit 79, this will be some more patterns to be formed. Maybe some bearish reversal patterns, regardless equal to sell. Maybe hand shoulders will be formed. So we will see. But that the area that we should keep an eye on in the coming week, because as soon as market will hit it, the most interesting stuff will start. So let's see what we will get on the next week.